Hello value investors, thank you for joining me. Right now we're going to talk about Blackberry and why I believe Blackberry is overvalued. So we're going to talk about its revenue growth rates, we're going to dissect its recurring business model, we're going to talk about its licensing, and we're going to finally come to its valuation. Before we get started though, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced arguments for the stocks I own. So let's get started. So Q1, if you remember, was quite a difficult quarter for many businesses. Blackberry also was quite difficult. Q2 was quite strong. It had returned 6% year-over-year growth rates. So that's quite attractive. However, for the remainder of the year, its fiscal 21 is looking to come in at negative 7%. So for this, I've taken CEO John Chen word that it's going to be approximately 950 million, but I've added some estimate for lowballing. So if we look at its guidance for the full year, it comes to 965. Let's say that figure. So it shows that year over year is still going to be negative. If we compare what the street is looking at, the street is looking at approximately negative 20% for next year, for next quarter. I don't think it's going to be as doom and gloom as that, but I do take in point that it's going to be most likely negative. So if it finishes the year at negative 7%, it shows that the business is not really growing that much and that Q2 is really just a flash in the pan. One more thing I wanted to talk about is that for bulls, they're kind of looking at the 90% recurring revenue stream from its software business. But as we dig into that, we can see that last year, if we go through the SEC filings, that last year Blackberry's recurring revenue stream was actually greater than 90%. So this year it's a smaller business that's recurring within the software business, and it's not only a smaller business. If we can take a consideration that its software business is 58% of its total revenue. So it's a small part of Blackberry that is a software business, less than 60%, and within its software business, 90% of that is from a recurring revenue stream. Blackberry says its annual recurring revenues for the business as a whole is less than 0.5 billion. So on the surface, for a business that has 500 million in recurring revenues, paying a market cap of 2.5 billion is quite a cheap multiple, particularly at the moment in the stock market. However, investors not only want that visibility, not only want that strong recurring revenue stream, they also want growth. Growth is really in a lot of passion for investors. So it's going to be difficult to build a strong bullish case for businesses that has a SaaS business that's compressing over time. So one more thing I wanted to talk about is that what really drove this quarter's performance was its licensing business. Its licensing business jumped 86% year over year. So that is really quite strong. Now, management guides that its licensing business is going to be modestly above 250 million. So if we take this number and we say, okay, modestly above means 260 million for its licensing business. And we know that for the first half, its licensing business was 166 million. That means for the second half of fiscal 21, it's going to be 94 million. So 94 million spread over 2 quarters. That's not only a step down from what it did in Q2, but it's a step down from what it did in Q1 too as well. So that was just really a one-off, and investors should not be pricing in too much into that. Moving on. So on the surface, Blackberry's cash flows from operation dramatically improved from last year. So last year's the first half was negative 47 million, and this year it's at break even. So investors should really be thinking about, okay, we have a business that's growing from last year in terms of its cash flows, but break even is not enough. Even if it comes out for the whole year of fiscal 21 at approximately, let's say, 30, even say 50 million of cash flows, that means that investors will be paying approximately 50 times multiple for a business is compressing. It's quite difficult, whichever way we go about it, it's quite difficult to come up with a concise argument for why BlackBerry is still undervalued. So we've gone through its revenues, we've talked about its guidance, we've broken down its licensing business, and we touched on its cash flows from operations. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. Thank you for watching. I'll see you next time.